You're watching Business Today Television. I'm Sakshi Batra, and this is your favorite show, Daily Calls, the show that addresses all your stock-related queries. Well, this is a show where you can actually get all your stock queries answered by top stock market experts who join in on the show. In case you're still worried about most of the stocks in the red in your portfolio, what is the right strategy that you use? Well, send us all your questions. The WhatsApp number is flashing on your screens. So send in your queries. Don't forget to mention your name, your location, and your contact details. Alternatively, you can also use the YouTube platform where you're watching our show live on. Use the comment section there to send me your questions, and I'll be happy to take them as well. It's a day when the benchmark indices are actually still flat in trade with the negative bias as far as the Nifty is concerned. But the banks and the financials have actually taken the front row today. They are the ones that are bucking the trend. The Nifty Bank about 0.5% higher, financials up by about 7%. On the other hand, you have the cement stocks that are lagging behind. Of course, there's this big news that Ultratech Cement is entering the cables and the wires business. So the cement stocks are under pressure, cables and wire stocks are under pressure, but banking stocks are cheering. RBI's reduced risk weightage as far as the MFI exposure is concerned. So we will be getting you all those stock points that you need to track as far as the markets are concerned, and we will address your queries as well. Akshay Bhagwat is joining in on the show with us. Hi Akshay, warm welcome and good afternoon to you. Tell us, how are you looking at the market sentiment? Well, it's the expiry session also today. How do you see the expiry session panning out in the latter half?
Good afternoon, Sakshi, and to all the viewers. See the Nifty is still in a downtrend. Technically, things don't improve. Although oversold, if you look at the market breadth, the mid cap, small cap index continue to take a beating. It's just the banks who are saving the day, but really, with the breach of 22,800, the continuous selling pressure by the FIIs in cash and the future segment, the rupee dollar crossing above 87, and global concerns continue to mount. These are the tensions which would keep the market on a slippery footing. Technically, the supports are pretty far off. 22,000 is where the support is. And for any recovery, at least the minimum criteria is Nifty should cross 22,800. Only in that case, we will revisit and check if the markets are trying to stabilize. But as of now, there is still some more pain left in the system.
Okay, some more pain left in the system. We'll keep coming back to the sectors and the stocks where Akshay is positive on, but we'll also take up all your questions as well. We'll start off with some of our YouTube questions that are coming in from our viewers. A lot of them already joined in the early part of the show. So we have Karan, Mr. Kumar, we have Kamlesh Narkhere, Kanishk Modal, Vivek Matre, Manish Kumar also joining in, Muthu Palani, Kanishk Modal, all of them with their questions. Warm welcome to all of you, and thank you so much for writing in. We'll start taking Karan's question first. His question is on Hyundai Motor. So the first question is on the auto stocks, and he wants to know Hyundai Motor के shares को sell करूं या hold करके रखूं. जब से IPO आया है तब से 1960 के प्राइस से लोअर ही लगातार ये स्टॉक चल रहा है, तो इसमें क्या करना चाहिए? आपका सवाल बिल्कुल ठीक है करण. देखा जाए तो Hyundai Motor को जब IPO आया था तो ये देश का सबसे बड़े आईपीओ के तौर पर आया था, और बात ये हो रही थी कि 25-30 वर्षों के कामकाज के बाद Hyundai मोटर जो कि एक दिग्गज कार मेकर है, वो अपना आईपीओ लेकर आ रहा है. तो डेफिनेटली बड़ी कार की कंपनी है और काफी पॉपुलर कार मॉडल्स हैं, इसकी डिमांड बहुत होती है इसके कार मॉडल्स की, लेकिन फिर भी स्टॉक मार्केट्स में इसकी जो परफॉर्मेंस है वो थोड़ी निराशाजनक डेफिनेटली देखने को मिली है. तो अक्षय, कैसे सजेस्ट करना चाहेंगे Hyundai मोटर को? ऑल्दो इसके बहुत हिस्टोरिकल चार्ट्स तो आपके पास होंगे नहीं टेक्निकली, बट ओवरऑल स्पीकिंग अभी Hyundai के ऊपर क्या व्यू देना चाहेंगे?
ये देखिए, Hyundai आईपीओ जब से लिस्ट हुआ है तब से लिस्टिंग डे के बाद हमने कोई बड़ी तेजी देखी नहीं है. दो तीन बार अटेम्प्ट जरूर हुए थे 1900 के लेवल्स पार करने के, बट वहां पे काफी सप्लाई दिखा है. तो टेक्निकली जिस तरीके का प्राइस सेटअप है, मैं कुछ ज्यादा एक्सपेक्ट नहीं कर रहा हूँ कि बहुत बड़ी तेजी आगे चल के देखने को मिलेगा. इनफैक्ट जिस तरीके का करंट सेटअप है, रिस्क है कि 1600 या 1600 के नीचे भी स्टॉक आगे चल के जा सकता है. तो क्लियरली एक एग्जिट है मेरे लिए ऑन बेसिस ऑफ प्राइस सेटअप. तो कुछ ज्यादा उम्मीदें आप ना करें Hyundai मोटर इंडिया पे ऑन द प्राइस टेक्निकल सेटअप.
अभी भी कोई उम्मीद नहीं है कि बहुत बढ़िया प्राइस रिवर्सल आपको देखने को मिल सकता है या तेजी आपको देखने को मिल सकती है, क्योंकि कहीं से भी अभी ये इंडिकेशन नहीं आ रहा है कि बहुत बड़ी रिकवरी यहाँ पर देखने को मिल सकती है। तो फिलहाल अगर आप कहीं स्विच कर सकते हैं एग्जिट करके, तो आप वो भी ऑप्शन ले सकते हैं। अगर आपका छोटी अवधि का नजरिया है तो डेफिनेटली इस राय को आप फॉलो कर सकते हैं। एक और ऑटो स्पेस का ही स्टॉक है जिसके ऊपर क्वेरी आई है मिस्टर जे कुमार की, और ये टाटा मोटर्स के बारे में बात करें। दिलचस्प बात यह है कि टाटा मोटर्स भी एक ऐसा स्टॉक है जिसमें निवेशकों ने भर भर के पैसा लगाया साल 2024 में, बढ़िया रिटर्न भी कमाए, क्योंकि एक तरफा रैली भी स्टॉक में हमें देखने को मिली थी, काफी लंबे अरसे के बाद एक आउट परफॉर्मेंस नजर आ रही थी। लेकिन जब से बाजार में वापस से कंसोलिडेशन शुरू हुआ है लास्ट 4-5 मंथ से, टाटा मोटर्स में भी हमें नीचे के लेवल्स देखने को मिले हैं, सो मच सो दैट द स्टॉक इज नाउ स्लिप बिलो 700 मार्क एज वेल। तो जे कुमार जी का सवाल है कि टाटा मोटर्स को सेल करके कहीं और बाय करना चाहिए क्या, और प्लीज सजेस्ट कीजिए कोई और स्टॉक अगर आपको सजेस्ट करना हो। अक्षय, यहाँ पर भी टाटा मोटर्स में भी डिसअपॉइंटमेंट, अब 650 के आसपास आ चुका है ये स्टॉक, कितना और नीचे जा सकता है? क्या यही वापस से खरीदारी करें, अपने पोजीशन को अक्यूमुलेट करें, या फिर कहीं स्विच करें? क्या राय देंगे?
जी, सबसे पहले टाटा मोटर्स का अगर आप गए 7 महीने का जर्नी देखें तो एक तरफा सेलिंग का प्रेशर देखा है हमने, करीबन 1200 से लेके 650, और यहाँ से भी कोई उम्मीद नहीं दिख पा रही है कि इसमें कोई स्ट्रांग रिकवरी होगी। 600 एक सपोर्ट जोन है, 600 से 620, यहाँ से आप उम्मीद कर सकते हैं कि कुछ स्ट्रांग रिकवरी बाउंस बैक आपको मिल सकता है। तो अगर आप एवरेजिंग के लिए ओपन है तो 600 और 620 ये लेवल्स है जहां पे आपको बहुत बारीकी से ट्रैक करने हैं, वहां पे आपको बाइंग की पोजीशंस बनानी है। और अगर आप स्विच ओवर के लिए ओपन है, ऑटो स्पेस से ही कोई स्टॉक्स आप देख रहे हैं, तो अशोक लेलैंड एक स्टॉक, एक जिसका टेक्निकली एक सेटअप काफी स्ट्रांग है। गए 5 महीने के मंदी में मेरे हिसाब से ये स्टॉक कहीं ना कहीं 200 का सपोर्ट जोन होल्ड करके काफी स्ट्रांग दिख रहा है, और मोमेंटम नहीं है, साइडवेज है, पर प्राइस स्ट्रक्चर स्ट्रांग होने के चलते मेरी उम्मीद है कि स्टॉक 260 270 मार्केट सुधरने पे हो सकता है। तो अशोक लेलैंड पे आप दाव लगा सकते हैं तेजी की ओवर टाटा मोटर्स इन द टाइम फ्रेम ऑफ 6 months to 1 year।
Okay, so Tata Motors, if you're open to averaging, look at 600 to 620 odd levels where you can actually look to average. Of course, the stock has slipped about 40% in the last 6 months, but in the long run, these could actually offer you good entry points as well if you have a long term view, that is. But alternatively, if you're looking at any place where you can actually get better recovery in the nearer term as well, then Ashok Leyland has been selected by Akshay, so you can keep an eye out on that also, Mr. Kumar. Next, we have this question on Kamlesh Narkhere sending in this question. हैवल्स, केईआई इंडस्ट्रीज, पॉलीकैब लॉन्ग टर्म के लिए बाय करना है क्या? करंट सिचुएशन में इनमें वैल्यू दिखती है? वेरी टाइमली क्वेश्चन यू हैव आस्क्ड कमलेश जी, सो गुड टू हियर दैट यू आर लुकिंग एट अ positive way as far as the cables and the wire segment go. Like I pointed out, Ultratech, a major cement player, one of the deepest heavy pockets, is entering into the cables and the wire segment, and therefore we have actually seen a sharp knee-jerk reaction on the downside for most of these companies. Look at Polycab, 15% lower. Havels is down in trade, although there's been recoveries throughout the course of the session today. But many of them are still reeling under pressure. KEI Industries. So some people are looking at it as a buying opportunity because these stocks ultimately are leaders of the cables and the wire segment. Fundamentally, there is nothing wrong in these companies as well. But we'll ask Akshay's view here. Akshay, how are you asking clients to take the benefit of this situation? Should one go at Ultratech, where of course there is a leadership as far as the cement space is concerned, and now the company is actually foraying into an ancillary space. So when somebody goes and builds a house, they may be actually looking to buy Ultratech cement, but sooner or later they will also look at प्लस वन, दैट एक ही दुकान से आपको केबल्स और वायर्स भी मिल जाएंगे। या तो हम इस तरीके से देखेंगे, या फिर अभी करंटली, क्योंकि इस फॉर्मेशन को आने में भी समय लग सकता है, टिप्स को इस्तेमाल करके पॉलीकैब, हैवल्स, केईआई जैसी कंपनियों को अभी खरीदे, क्योंकि फंडामेंटली तो कुछ खराब नहीं हुआ इन कंपनी के लिए।
जी, so what has happened is today cables and wiring sector is in the limelight today, and the fall is pretty intense today. So really,
Yeah.
it's better that you give these stocks some time for the dust to settle in, because this is the initial reaction to the news. There can be some pullbacks, these are trading pullbacks, but really from an investor's perspective, you need the situation to be settled, to calm down before you take a position, because immediately this is not going to bounce very hard. So out of the three companies, I think Ultra Semco is best placed on the charts. 10,300 is where it trades, and if you're getting somewhere around 9,500 to 10,000 zones roughly, I think it's a good bargain hunting level which you get in Ultra Semco. If you're looking for good entry levels in Polycab or KEI Industries, then again the suggestion is let the dust settle down, let it kind of settle down somewhere around 2750 odd levels. That's a good level where from a risk reward perspective things become more sorted. So that's the level you can look forward to from a investment horizon. And for Polycab, the levels you should look forward to from a technical perspective is somewhere around 4,400. So out of all these stocks, Polycab is the weakest in terms of the price action and the technical price setup. So the preference is first go for Ultrasemco, second is KEI Industries in case you are inclined from an investment perspective.
Fair point. I hope this has answered your question there. And for all the other viewers also who are looking at today's development as an opportunity, how you should be really looking at the large cap cement basket as well as the cables and wires basket as well. Okay, we also have, okay, one more question coming in on KEI only. I'll also address that. Chandan Jain from Hubli, Karnataka says, can you please suggest a buying price for KEI Industries? अभी करंटली 19% लोअर है, अभी खरीद लें, दो सर्किट्स ऑलरेडी लोअर के लग चुके हैं, उसके बाद क्या अभी 19% लोअर पे इज इट अ गुड टाइम और शुड वन वेट? अक्षय,
I think 2750 is a good level to wait for. Maybe it bounces before that, but ideally, as things stand right now, technically 2750 is a trading support. We really have to see how the action builds up once those levels are tested. So it's a preemption that 2750 should be a support, which should be a good buying level for KA Industries.
2750, that's a good level for buying. I hope, Chandan, this has answered your question. Let's take the next question. This one is from Mohit from Ludhiana. He says, good afternoon, I have got 200 shares of Star Health Insurance at the rate of 590. My time horizon is 3 years. What should I do on my position? Okay, so again from the insurance basket, Star Health at 590, how does that stock really look to you, Akshay?
Uh, well, Star Health and Allied Insurance Company, the setup is clearly negative. There has been
Yeah.
intense selling pressure right from the levels of 640 to 358 where it stands, and still, at least despite being heavily oversold on the price charts,
Hmm.
I do not see any bottom in the formation. It's at its all-time low levels. So I would give this a miss. Or if you are owning this stock, ideally a slight recovery around 375, 380 should bode well for an exit. So it's an exit for sure. It's about where is the best price to exit. As of now, 375, 400 zone is a good price to take an exit.
Fair point. We'll take another one then. This question is coming in from our viewer, Mr. Satyan. And he says, good afternoon, Team BT. Good afternoon to you as well, Satyan. Good to be hearing from you. He wants to know, is it best to shift from my loss-making positions on chemical-oriented stocks like Aarti Industries and ACI Chemicals to maybe an Indus Tower, which is probably doing better even in this volatile time? So he wants to shift the sector only that he is invested in from chemicals to a telecom ancillary space. Indus Towers is what he is looking at. What would you be able to suggest here? Chemicals basket pay, Aarti Industries and ACI. Should he switch? And is Indus Towers a better alternative?
At least going by the current price action, Indus Towers looks better priced over Aarti Industries. So really, if you are more keen from the fundamental perspective, it's best you consult your financial advisor. But technically, my view is 300 is a massive support for Indus Towers, and the probability of a recovery, if you compare these two stocks, is higher in Indus Towers, where the targets of 425, 440 from a slightly 3 to 5 month horizon look a higher probability. So yes, switch over to Indus Towers if you are betting it on a price action front is what the advice is.
Fair point. We will take one more question from our WhatsApp viewers, and this is Sahil Holkar. and he's from Pune. Hi, Sahil. Hope you're doing well. His question is on the railway space, Akshay. Jupiter Wagons is on his mind. He says, I've already bought the shares, 250 shares, at the price of 500. Now, what should I be doing? Of course, Jupiter Wagons today also has come up with a news flow. There are some order flows that are coming in for the company. So the railway companies are consistently getting orders. That's not a problem. But the initial phase when the railway counters were on an trend was that they were hugely betting big on every day the order flow news that was coming in, huge sectoral wave that was on. But in the last 5 months or so, the momentum has been completely lost, even though the business continues. So, what would you advise on Jupiter Wagons? He's bought it at what, 500 odd levels, and the stock has come down to 298 now.
So the rail sector actually has seen a lot of intense selling in the last,
Yeah.
rather I may say, almost over a year now, and
Mm.
the selling pressure is aggravated lately in the last 2 3 months. But from the current levels where Jupiter Wagon trades, the downside really looks capped for me, at least on the price charts. 270, 280 is a massive support for this on the longer term charts, and the probability of a recovery or a bounce once it nears the support zone is very high. So the suggestion is if you're open to averaging, you can average. If you need a stop loss, 245 is the stop loss you need to keep. But from a longer term perspective, really on the basis of charts, I do not see any major recovery. The best case, I see the recovery working till around 375, 380. And that's the point where you should consider an exit and switch over to some other sector from the rails and the wagon sector.
I hope this has also helped you out in understanding how should you be proceeding on your positions. We'll take some YouTube questions now. We have this question coming in from Kanishk Mondal, and he says, I have Tata Technologies shares at an average price of 1038, and I'm holding over 3300 shares and with a vision of 3 to 4 years. What should my strategy be? Well, you've actually been pretty patient since the time the IPO has again come in. Just like Hyundai, there has been no meaningful move on Tata Technologies as well, despite the fact that it belongs to the one of the biggest conglomerates of India as well, and that is the Tata Group. And this IPO came in what, after 20 years after TCS got listed, because that was the erstwhile IPO that had come in, and that, of course, has been a wealth creator. Belonging to the technology space, there were a lot of hopes, but again, the stock price has not really been very impressive. Akshay, for Tata Technologies, of course, the view term is long, 3 to 4 years. Do you still believe Kanish should continue to holding the stock?
Really, technically, there is not much to comment because it's been a one-way fall since its listing and really doesn't stop. Where the stock forms a bottom, where is the value coming in? Because right now, as I look at the price and volume action, there is no evidence for me to say that a possible bottom is in the making or it is highly oversold. So yes,
Okay.
if for a 4 5 year time horizon, it's ideal you consult a fundamental advisor. Technically, at
Mm.
least for me, it's an exit. There is no support in the making, and clearly, unless and until the stock shows any strong rebound signs, that would be the point where the stock finds value, which is not in sight as of now. I would say it's an exit for me at the given level where it stands.
Okay, understood. I hope, Kanish, this has helped you get a little bit of clarity as to how do you proceed with your stocks. Well, Vivek Matre has also written in, again, a YouTube viewer. He says, I have bought 6,000 shares of Jyoti Structures at the price of 34. Please suggest what I should be doing at this point in time. Okay, Jyoti Structures bought at 34 odd levels, 6,000 shares in the quantity. What's the outlook on technical charts, particularly looking like?
Technically, it's trading near a support zone, so you can anticipate a recovery or a pullback from the levels of 16 to 17 zone. It's at 17.5 right now, but really, this recovery does not mean that from a longer term time horizon you can see significant price gains because the price structure is somewhere distorted now. It doesn't hint any major upside going ahead. The best case scenario works till 24, 25, and you need to take a review there again. So as of now, keep a stop loss from a risk management perspective, which is would be around 14. And in case it recovers, 24, 25 is the level where you should consider an exit.
Fair point. Okay, let's take the next one then. We have this question again on our YouTube. from our viewer who is Manish Kumar, and he wants to know about Nalco. He bought the stock at 201 levels. Now he's asking what should he be doing. Metal space again have been a volatile space, Akshay. The recent troubles have been emerging from the US with Mr. Donald Trump's tariff announcements coming in for the metal pack. And every day we keep hearing about today it's on aluminium, next day it's on copper. So the metal space is really jittery as to how the impact will pan out. Nalco specifically, what is your outlook on right now?
Well, technically, if you look at the longer term charts, the zone of 260, 270 always has been very much vulnerable for a sell off. These levels were seen way back in 2010. We had a massive sell off again, and currently there is still some more downside to go. So, 165 roughly is the level where the stock may see some support being formed. Longer term, really, after the sell off from the levels of 260, there is less hope that the stock will see a massive rally from a longer term perspective. So, the suggestion is look to average at 164. This averaging strategy is just to see that we minimize our overall losses, or we get a better average price from where you have entered, and try to take an exit somewhere around 200 to 210 zone on a recovery rally.
Okay, let's take some more questions. We'll take the next question. This one is from Vivek Mhatre, who says, I have 2,500 shares of Imagica at the price of 83. Should I buy more or should I exit my position? What should my strategy be? On Imagica from the entertainment space. Any suggestion here, Akshay?
The price structure from a longer term perspective is still strong. It is the medium term which is a problem zone, and probably going by the current price structure and reading, there is a higher probability the stock might see a dip till 5050. So, if you're open to averaging, 50 is the price you need to average from a longer term perspective, and keep a risk management stop loss of 40. I think the stock should recover well from 50, and then we need to take a review again. But longer term, you can continue to hold as the price reading goes now.
Fair point. Let's take the next question. This one is from Archana Sahu again from our YouTube viewers list. She says, Hi Sakshi, good day to you. Good day as well as to you, Archana. She says, I'm from Bangalore and I want to know on two stocks. The first one is Swiggy and the next one is NTPC Green. Can I enter these two stocks from at the current levels for next 2 years? Okay, we'll try and help you out with that one, Archana. Food delivery space, Swiggy, everybody knows. And of course, the other one is a recently listed stock, NTPC Green, where the chart structure will be limited for both of these, although difficult for you to answer, or do you think one of them is better than the other at this point in time for a 2 year time frame if somebody has, Akshay?
Swiggy, the prices have actually got below the listing price. It listed somewhere around 420. It had a strong run post the listing, but really with the levels at 340, 350 where it trades right now, doesn't bode well from a longer term price perspective. So I suggest in this space, Zomato is better placed over Swiggy. So if you're open to shifting over to Zomato because the price damage is less there and the scope of recovery from a longer term perspective is higher there. So Zomato is my preferred bet over Swiggy. Shift over to Zomato. And as far as NTPC Green Energy goes, I think this stock is an exit because the logic stays the same after listing. If the prices are getting below the IPO price, clearly it means that the guys who bought for listing gains, post listing gains, are all taking an exit. And clearly on the price chart setup, it's an exit for me.
Okay, hope this has answered your question, Archana. Next, we have this question coming in from Ankur Modi. Says, Hi Sakshi, hope you're doing well. I'm doing good, Ankur. Thank you for asking, and I hope the same for you. His question is, what should long-term investors like me do in this falling market? Kindly guide. Good question, Ankur. I think a lot of investors at this point in time who have a long-term vision are actually feeling stuck. They are not getting the confidence to put in fresh money in either key sectors or stocks at this point in time, or they are also confused about what to do with their existing positions which are in the losses as well. There is this underlying hope that, of course, 5 months on, there could be a recovery that will be coming in. And once that happens, then they will take some action. But we'll try and understand from Akshay, who's been looking at market cycles way more than you and I have been. Akshay, what would you suggest for long term investors looking at this everyday lackluster trade? 5 months of pain is what we've already seen. Now, you did mention in your initial comments that we could be probably nearing the end of this pain, but what should they do? Should they absolutely stay put, not do anything, wait patiently for situation to improve at this point?
So the thing is, this 5 months has been a pain point, and really the data, if you pull it out, I think after 1996 there has been no. I think this is the first time where 5 months of a one-way move has been seen in the index. Stocks have taken severe beating, but really investment is a journey, and you cannot be on the wait and watch on the back foot, because really you don't know where the markets would bounce, which would be the possible point, because it's not about timing. If you're an investor, it's more about the market cycles you are in. Currently, unfortunately, the cycle we are in is in a downtrend, and for the things to shape up well again, it might take some time more. So really, use the SIP method. Keep investing in the market, because just wait and watch approach is not going to help you. Stocks may rebound a bit,
Yeah.
but really pouring in more money using the SIP route is the best way to approach such markets. And that's how I look at it.
Okay. SIP approach to this current volatility will probably help you average down your costs in the markets, so that when the recovery happens, you automatically benefit from the lower cost averaging that you have done in this period. Let's take some other questions. Vijay Sinha from Hyderabad writes in on our WhatsApp number, and he says, I'm having Oro Pharma in my portfolio and I'm sitting on a loss of 15% on this one. Although I can add more and I can hold the stock for the next 3 years, could you please suggest whether I should continue to stay put or exit this and look at some other stock that will probably give me better profits? All right, we'll try and help you out with this one also. Akshay, chartically, Oro Pharma, how is that one looking? Do you think with a 3 year horizon, it's good enough to look at the current price also to average out, or is it better to switch within the pharma pack only?
I think if you're open to switching, that is a better option. At least first in Oro Pharma, there is still some more pain left. Probably 1,000 is the level where the stock can see some good bounce back. So if you
Hmm.
are just you are interested only in Aurobindo Pharma, 1,000 is the level where you can consider buying it for a recovery rally. But really, from a longer term perspective, if you are searching from stocks from this particular sector, I think Divi's Lab is better placed on the charts from a longer term horizon. I'm talking about horizon of minimum 1 year plus. Here the price structure is strong, and from an investment perspective, easily I think the stock can head for 7,000 plus. Supports are 5,000, targets are 7,000, but really you need to give more time. But if I compare the two charts of Aurobindo and Divi's, I think it makes more sense based on technical price reading to opt for Divi's over Aurobindo Pharma.
Fair point. Okay, I hope this has answered your question. Some more questions coming in on our WhatsApp number, so we'll take those. Next one is from Anna Malai. He's from Tamil Nadu. Hi, Mr. Anna Malai, how are you? Says, I'm holding 430 shares of KNR Constructions, and this is at an average price of 317. I want to know whether I can start averaging and buying more at the current levels. I'm a long term investor, so I can hold on for a long term. KNR Constructions from the Infra Pack, how is that looking? And current levels for averaging, do they point out to that fact?
Support is around 200 to 210. So that's the averaging point for you. But looking at the price structure of KNR in the last 5, 6 months, long term strong upside is a bit of a question mark for me. So buying at 200 to 10 is more from a recovery rally perspective. The stock, even if it recovers, will get into a sideways trading action. So the best way to look at it is buy at 200 to 10 and look for exits on rallies around 275 to 290. That's the way I would approach the stock. Longer term, it's the price is distorted. It will get more into a sideways consolidation zone. That's the initial sense I draw looking at the price structure.
Okay, so Mr. Annamalai, for you, the idea is to actually buy it further lower from here. and only look at this relief rally that could take the stock to about 275 to 80 odd levels, but look for an exit there and probably switch from those levels there as well. And maybe because the stock will be in a long term sideways consolidation as the price chart suggests to our guest. So look at it that way. Even if you hold on for long, you may not get like a substantial upside. So be careful about that and do speak to your own fundamental expert as well or financial expert to guide you on this. Let's look at the next question. This is from Gul. On our WhatsApp, she says, "Hi Sakshi, I have Antony Waste Handling Management stock purchased at 544, and the other one that I have is Bharti Airtel that I purchased at 1629. At what price can I add more and average both these stocks?" Okay, we'll take them one by one. First, Antony Waste, for you again within the waste management. For those having this absolute long-term vision, waste management seems to be like a big theme, and Antony Waste has been, a long-term story as well. Your suggestion on this one, Akshay?
Well, long term, I think there is no issue holding the stock. It's corrected significantly, and I think the levels of 520 odd levels is a very strong support. Is a good price if you are taking an entry based on the technical price charts. So the suggestion is yes, you can buy the stock at the current rate, but do not expect any fireworks soon after you buy. It's going to take some more time to consolidate. Looking at the rough patch we all are in currently, if the market helps it out, I think this stock is a good stock to be in. So yes, hold the and average. That's the advice for Anthony Waste Cell Handling. And Bharti Airtel, I believe, is the second stock you asked for. So
Yeah.
Bharti Airtel has had its fair share of run up. It is one of the strongest counter in the entire space in futures and options. But from here, I think do not add more. If you have the stock, keep a stop loss of 1500. This stock already has had a fair share of run. There are some corporate actions in this script which will keep it more in a range in the times ahead. So revised stop loss approach works best for me. 1500 is the revised stop loss you need to keep on Bharti Airtel.
Fair point. Okay. Well, I hope this has answered your question. Actually, we'll thank you on that note for answering all those questions of our viewers. It's always good to hear, your calm, composed, as well as collected voice when it comes to clear guidance that you give to all our viewers, and that's what they appreciate about you too. Thank you so much for being with us on the show. We'll get into the second segment now, viewers, and we'll have another guest joining right in on the show to answer all the rest of your questions. Mr. Ruchit Jain is now with us. He's the Vice President and Head of Equity Technical Research at Wealth Management at Motilal Oswal Financial Services. Hi, Richard. Warm welcome. Good to have you. A lot of questions coming in from our viewers. You can actually understand, we are in the fifth month expiry session, fifth month of losses. So a lot of nervousness and yet, anxiety creeping in into the minds of people. First up, we'll take your sense on the market overall. Now, it seems like we are going to be again ending this day on a lower note as far as the benchmark index is concerned. But what's the sense, outlook on the new series as well? Do you think after 5 series of pain, there could be some up move?
Yeah, hi, very good afternoon, Sakshi. So, Sakshi, I think the pain here is not more in the index from current levels, but we can certainly see that the pain is the portfolios because of the correction that we are witnessing the mid cap and the small cap names. So, even if you look today, the index is flat, not doing much, but no, the mid cap and the small cap space has been showing no down move like there is no tomorrow. So, I think still there are no signs of no broader markets getting bottomed out. So we think that still the pain could continue going ahead, especially in the mid and the small cap names. And until we get some signs of reversals, I think it's better not to do any kind of bottom fishing over here as well. So overall on the index front, we are watching out for 22,000, 650, 670 as a support zone for now. Only if we manage to surpass that, then we would expect to anticipate a pullback move in the markets, and only space where we are witnessing some sort of relative strength is the banking and the NBFCs. So, within the banking, also only private sector banks we can see because there are some of the names from private sector banks such as Kotak Bank, HDFC Bank, which had not performed since last 3 to 4 years when the markets were going out. So there is no room for selling over there because those stocks were not expensive, since they are not rallied as well. So that's why we can see that the downside seems to be relatively lesser in the private banks and the certain NBFC stocks. So I think this is the only space to hide for now. But apart from that, when if one is looking for any relief in the mid cap and the small cap same space, then there's no signs of any such relief. So I think still the pain could continue going ahead.
Pain could continue, especially in the broader markets. No sign of easing of the pain in the broader markets. Mid and small caps continue to reel under pressure, but banking, financial, heavyweight, large private sector banks, and financials could be the hiding place as of now. Okay, Richard, we'll start taking some questions that are coming in from our viewers for you. We have this question coming in from Sumit Goel. He's written it on our WhatsApp. He says, I'm from New Delhi. And I would like to know the guest's view on Coal India from a long-term view, that's over 1 year perspective, and also the right time to take a fresh entry. Coal India has been, a recent past success story, but in the last 5 6 months, it's lost all the momentum. Your sense, should one continue to look at this afresh, or is a large part of the rally done and dusted for this one?
Suggest at current levels, but definitely can be a stock that you can keep on your watch list. The weekly 200 EMA for the stock is placed around 325, 320 range. So in case if we
Okay.
get some more corrections, 325, 320, then I think the risk reward ratio could become favorable to buy it for from a mid to long term perspective as well. For now, I think just keep it on the watch list. Around 320, 325 could be good entry point where you can take a review on the stock.
Fair point. Let's take another one. This is Satya CK writing in on our YouTube, says, good afternoon, Sakshi. Could you please ask for levels on e-clerks and on Birla Soft? Are any of these two stocks good from here to take a fresh entry or average? E-clerks and Birla Soft for you. Which one do you really find technically positive right now, Ruchit?
It's actually one common thing that no one common question I think that many investors are asking us also whether to average in stocks here or not.
Yes,
So I
yes.
believe that generally it's actually if you see whenever the markets resume their uptrend or whenever the markets turn around from here, so it will
Hmm.
not be the beaten down mid caps and the small cap stocks which will take the leadership. The leadership will come from the large cap names and from such stocks or sectors which are not falling now. So if you look
Correct.
at last recent 15, 20 days, there would be some names which are not connecting. So look for if see when you are averaging, you are putting fresh money. It's not that you are not putting fresh money in the stock. So rather than investing money in such stocks which are not performing, look for investing that amount in other stocks which could be the leader in the next bull market. And I think one of the thing that we usually look at filtering such stocks is look for stocks which are outperforming or are not correcting much in such kind of market. So I would suggest averaging stocks such as BSoft at least over here or even eClux. If you see then the stock has not shown any kind of relative outperformance so far. So I think still the down move could continue. Levels wise, eClux is trading around its 200-day moving average support. 2880 is the initial support level, which if broken, then major support will come around 2550. And Birlasoft, you can see that when the overall IT space was performing, at that time also this stock was not performing. So you can understand that when if the sector was in an uptrend and still if some stock is not performing, then I think that should not be the place where you should look to invest fresh money. Major support for Birlasoft in long-term charts is still far, maybe somewhere around 400 to 360 range. So I would advise not to average both of these. Rather look for such names you're deploying fresh money even when you are averaging. Rather look for such names which are not falling in this market so that you have some relative safety. And once you get the sign of resumption of the uptrend from the large cap space, then you can look for mid cap and small cap because leadership will not be taken by the small cap space. In an uptrend, leadership comes from the large cap space, followed by mid cap, and then later on the small cap follows.
Okay, fair point. Let's take some more questions from our YouTube. We're getting some questions. Aman S. Aneja writes in. He says, I want a view on Ola Electric. I have 200 shares at the rate of 70. The second stock that I have is Anant Raj. Here I have 40 stocks at the rate of 675. So we'll take them one by one, Richard. First, Ola Electric. Again, limited data for you to study here. But the stock has been extremely volatile. For somebody bought at 70 odd levels, what's the outlook? It's now below what? 60 odd levels as well, 57. So sharply slipped below the IPO price again. Any suggestion that one should continue?
So very limited data I have. So, but no post listing, we have seen that the stock as of now is forming lower top, lower bottom structure.
Yeah.
So it's very difficult for me to give any level where this no correction would stop. But no technical trend is clear negative. So not advisable to stay invested in this. But still, I would I would suggest to take some fundamental views then as well. Know where are the fair valuations, where the which are the fair levels, from a valuation perspective, and then take a decision whether no, you need to exit that or not. But because there is limited data technically, so one should not take no decision basis only on that. Anantraj, as of now, the real estate space have been witnessing no the worst phase I can say in the recent times. Because the most one of the most underperforming sector has been the realty sector. So as of now, the trend for Anandraj also remains negative. 480 is only the support level to watch out for. In case if it has to show any kind of pullback move or trading pullback move, then it can come from 480 levels. But if it breaks 480 levels, then I think the stock could see further down. That 480 to 470, 10 rupees range you can there. So on the existing positions, you can keep a stop loss below 470, but certainly not advisable to buy any more quantities or any fresh quantities at current rates.
Fair point. We have another question coming in from Vinod Chaudhary. Says, "Hi Sakshi, good afternoon. Thank you for doing this show for all retail investors." Well, thank you so much, Vinod, for writing in. His question is interesting. He says, "Can I do tax harvesting by selling loss-making companies like Exicom Telecom, Poonawalla, and can I buy them again so that the loss can be carried forward for the next 8 years?" It's a good question, Vinod. Of course, a lot of tax experts do advise this in case you do have a lot of loss-making companies to do this for tax loss harvesting so that you can set it off later on for the next 8 years against profit-making companies. So you end up saving any tax that you may be compounding on the capital gains on the profit-making companies over the next 8 years for sure. Now, how do you do it? We will definitely get a tax expert to advise you on that. But we'll quickly take Ruchit's view. Ruchit, do you think tax loss harvesting comes out to be a good way to save taxes for stock market investors?
It is one of the way to save taxes where you can offset your losses, offset your profits against the losses if you book now, and buy
Yeah.
them again in the next year. But the risk remains that in this period, if the stock starts rallying, then you might miss out some of the part value which is
Yeah.
there. So that risk would always remain. But yes, it is one
Sure.
of the way in which you can definitely save your taxes. So consult your tax advisor, someone who is expert in taxation, so he can give you a better view.
Fair point, and we'll also try and do that show for all of you on Market Today once March hits, and then you can definitely look at that one as well. Next, Karthik S writes in from Bangalore. He says, "Which stock is good for the long term, that is next 5 years, between the wealth-creating stocks and AMC stocks?" I have a few choices here that Karthik has written. Nippon Life, HDFC AMC, Nuvama Wealth. Either of all three that you believe are promising for the next 5 years, Ruchit?
So I think if I have to choose either of these three only, then it will be
Yeah.
HDFC AMC
Okay.
because no, I think the overall structure is not that bad in HDFC AMC. So I think here downside could be limited. But yes, there is a risk of some time-wise correction happening in the AMC names, what I think, right? Because no, although yes, SIPs are still continuously growing, what we can see in the mutual fund industry, but still I think some time-wise correction should not be ruled out. So if you can manage the time-wise correction, then HDFC AMC could be one stock which you can watch out for.
Okay, we'll take some more questions coming in on our YouTube. We have Vinu P writing in, says, "Can I know if I can buy ITC at the current level for a short term?" Ruchit.
I would suggest to wait and avoid for now. There are no signs of trend reversals. The FMCG has been one of the states where we have seen some sharp correction and even ITC has not seen any kind of a major outperformance. So if I was just looking at the historical chart, then I think somewhere in the month of March 24, the stock had formed a good support base around 375 kind of range. So if we get some more dip around 375, 380, then I think for short-term reversal, for short-term perspective, the risk reward ratio could become favorable as the stop losses would be smaller over there. So in dips towards 375, 380, you can look at ITC, but not at current levels.
Fair point. We'll take Mr. Kamaruddin Hasmat's question. He is from Saudi Arabia and he's watching our show. Mr. Hasmat, the warm welcome. Good to see your question. And good to know that you're watching our show from Saudi Arabia as well. Well, your question is on Reliance Industries and Axis Bank. He already has positions here. What is your own view? Axis Bank, he bought at the price of what, 1020, and Reliance Industries at 1233.
So I think still trading around the cost price only. But I think these are good levels where, if you're looking at some large cap names such as Reliance and Axis Bank, which have already seen a good price-wise corrective phase. So the downside seems to be very limited from here on. So yes, definitely there could be some time-wise correction, because until the market resume its broader uptrend, do not expect that the market will not rally and these stocks would rally. But Reliance is trading around its weekly 200 EMA, which is a good point where the stock could form a good support base going ahead. So I think hold on your both the stocks which you have bought, and I think if you have some mid to long term view, then you can expect limited downside from current levels, and a good rally could unfold once the market resumes up more.
Okay. Mr. Subramaniam writes in, says, could you please give me an outlook on Woodco? Okay, we do not know whether Mr. Subramaniam has a position here, but Ruchit, on Woodco, technically, what do the price charts tell you?
Technically, as of now, this short-term trend still remains negative, because the stock has formed a lower top, low bottom structure, and just like many other PSU names, we have seen that in last 6-7 months, the stock has seen a huge underperformance. So there are no reversal signs as of now. Major support for the stock would come around 150 to 155 zone. So maybe when one has to take any contra buying calls, then 150, 155 zone one can review if the stock comes over there.
Okay, we'll take last couple of questions now. We have Karthik writing in on our YouTube, says, on IDFC First Bank and on Ujjivan Small Finance Bank, I need a view whether these stocks are good for the next 5 years. Can I buy them at the current levels? Any of these stocks do you like price chartically? Rujit, IDFC First or Ujjivan Small?
One of the parameters I just discussed, know that if one is looking for fresh investment, then one has to look for such stocks which are not falling in such kind of markets.
Yes.
And both these names, Ujjivan Small Finance as well as IDFC First Bank, have been an underperformer even when the banking space was in an uptrend. Right. So when the market was in an uptrend or the sector was in an uptrend, if the stocks are not participating, then I think one should not do bottom fishing in such kind of stocks. I think within the banking space, stocks such as Kotak Bank, which has recently given a breakout after 4 years of consolidation phase, looks much better on charts, even if you're looking from mid to long term perspective. So just because the stock has seen some correction, that should not be a reason to buy. But no, rather I would prefer some outperformer stocks such as Kotak Bank for fresh buying.
Okay, Namita Arora writes in, says, hi Sakshi, how are you doing today? I'm okay. Namita, I hope the same for you. She says, my portfolio overall is down 31%. And I want to know on KNR Construction and Just Dial, both these stocks have over 25% losses in my portfolio. What is the way out? Namita, we'll try and help you out. We do know that last 5 months have been a pain in the markets, and we're just hoping that the tide turns. But KNR Construction or Just Dial, any recovery in sight, Ruchit?
So no signs in Just Dial as of now, but KNR Construction is approaching its long-term support zone, which is around 215 to 220 range. So quite close near to this level. So I think if any kind of pullback moves comes, then you can expect some trading pullback on KNR Construction. And in case of such any trading pullback towards 260, if it comes, then take a review again around those levels.
Fair point. Well, we'll thank you then, Rujit, on that note, for being with us in the Daily Calls edition and helping all our viewers out, answering their calls and queries patiently. Always a pleasure to host you on Daily Calls. Thank you so much for being with us. Viewers, you can continue to write into us in case we could not take up some of your questions today. We can take them up tomorrow. 12 noon is when we'll be back tomorrow to answer all your questions about this market. Don't take any decision based on panic, but take an informed decision speaking to the top guests who we get on the show for you. Stay tuned with us. Market coverage will continue on the other side.
First, we have a list of pardons and commutations relating to events that occurred on January 6th.
US President Donald Trump has unveiled a brand new immigration plan. It's being called the ultimate VIP ticket to US citizenship.